Hi, this is Tony Sagami. I know the holiday travel season is behind us, but I still want to talk to you a little bit about vacations. In particular, I'm going to talk to you about some interesting information that came from Boeing. Now, Boeing knows a thing or two about the travel business, so I was very interested to hear what they had to say about the Chinese travel industry last week. China's been very good to Boeing. It has roughly a 51% market share of the commercial airline market in China. In fact, Boeing expects to deliver 480 to 495 airplanes to China this year, and that includes 25 to 30 of the new 787 Dreamliners. Now, Boeing expects to sell a lot more planes in the future going forward. In fact, Boeing said that it now expects that China is going to need 5,000 more airplanes by 2030. Now, that's an upward revision from Boeing's estimate of 4,300 new planes that it made just back in November 10 months ago. So you can see Boeing sees acceleration in the tourism industry in China. Now, of those new planes, only 16% are going to be replacements for aging fleet, but the other 84% are new purchases that are going to be needed to meet the new rising demand for travel. And the reason for that rising demand is that there's rising incomes in China. A growing middle class is triggering a big increase in leisure travel. Get this, 267 million people bought an airline ticket in 2010 in China. That's a 15.8% increase from the previous year. Now listen to this quote from one of the big VPs from Boeing named Randy Tinseth. He says, sustained strong economic growth, growing trade activities, increased personal wealth and income, as well as continued market liberalization will be the driving forces in shaping China's air travel market. Now listen to this factoid. He said, for the first time last year, the North American travel market was surpassed by travel within Asia Pacific. China will account for more than 40% of the demand in Asia Pacific over the next 20 years. That's a lot of travel. Now, what a lot of people don't realize in China, at least us Americans, is that until recently, Chinese citizens were prohibited from traveling around their own country. In the early days of the communist rule, Chinese were not permitted to leave the town they lived in without government permission, and that was not easy to get. Not to mention the abject poverty as a result of the collective communes and the failures of the Great Leap Forward. Could you imagine being told by our government that you could not visit the Grand Canyon or the Alamo or Times Square, or you couldn't travel to another state to visit your brother or your grandparents? That's the kind of restrictions they had to deal with. But there's no such travel restrictions today, and the Chinese are eager to see all the gorgeous, fascinating sights of their country. Now, how can you take advantage of this as an investor? There's several ways. There's several Chinese travel stocks that are listed on the New York Stock Exchange and the NASDAQ. There's two airlines, China Eastern Airlines, and that ticker is CEA, and China Southern Airlines. Their ticker is ZNH. These are two publicly traded Chinese airlines right here in the New York Stock Exchange. There's also a large railroad called Guangshan Railways on the NYSE, and that ticker symbol is GSH. This is the old Canton Railroad, and by the way, it does pay a pretty juicy 3.5% dividend. You also could take a look at ctrip.com. That ticker is CTRP, and that's kind of the Expedia of the Chinese travel business. And there's two hotel chains that are listed here on the NASDAQ. There's Home Inns. That ticker is HMIN, which is kind of like the Holiday Inn or the Howard Johnson of China. And then the second one is called the 7 Days Group, and their ticker is SVN. And they're more of a budget, kind of like a Motel 6 type chain of China. Well, how about Boeing? Is Boeing going to benefit from China? Yes. But I don't think investing in Boeing makes a lot of sense. The reason I say that, because the state-backed Commercial Aircraft Corporation of China, also known as COMAC, they're developing their own commercial jet planes. The one they're working on is called the C919. And this plane will eventually compete against Boeing and Airbus. Now, COMAC says the first C919s first test flight are going to be in 2014, and they expect to make commercial deliveries to customers starting in 2016. So Boeing has a very threatening competitor coming up in a few years. The thing that Boeing's, I think, has been very dumb about, they've hired a lot of Chinese subcontractors to build components for their airplanes. So what Boeing is doing is they're paying Chinese companies to learn how to eat their lunch down the road once they master the intricacies of aviation parts production. To me, that's dumb, dumb, dumb. But those are some ways that you can become a more lucrative investor by investing in the Chinese travel industry. Until next week, this is Tony Sagami signing off.